So I just wanted to go over these two trade setups that I seen that we've missed, and the reasons why you could have taken the trade, why I didn't take the trade. Mostly the reason I didn't take it is because I didn't see it. But if I was going to take it, why I wouldn't have. Okay, for the GBP JPY trade, anyways. We also had a GBP CAD setup that we could have taken as well. So I'm going to start off on the 4 hour time frame on the GBP JPY trade. Okay, so this is the 4 hour candle during London that I like to watch now. As I've said in many videos, I like to use the 4 hours my sort of where price is going. So we've got the open, we went high, the distribution to the downside, low, and then closed. Okay, so this is the candle that we was watching. Okay, that's why it's got the light bulb. So when we drop to the 1 hour time frame, you can see on the 1 hour why I would have taken the trade. Okay, so we've pushed down during Asia. Okay, this candle just before London did take out the Asia low. Okay, so price wicks back up, doesn't really do much here. This 1 hour wicks into this 1 hour FEG that was left behind from Asia. So we had an Asia continuation trade. Okay, so London continuation, Asia continuation, whatever you want to call it. But the main reason, obviously, I would have took this trade is because we had a 1 hour FEG with a close below at the 3 a.m. candle. So 2 creates the high, 3 manipulates the high inside the FEG, closes back within the range, and then we'd have been looking for the setup at 4 a.m. Okay, so this is where this trade becomes a little bit more in depth and a little bit more complicated than your ideal normal trade. Okay, so I'm going to drop to the 5 minute. Okay, and you're going to see that marked up, I have this level here, 1 minute market structure shift. Okay, the reason I have that there is because on a 5 minute we didn't have one. Okay, so you would have had this level down here. We did have it, but it was after the trade made quite a big chunk of the move. Okay, so you could have obviously taken a setup from this level here. Price would be running in profit still right now. But the reason I would have took this trade if I was going to be really aggressive based on the 1 hour being very bearish. Okay, so as you can see, 5 minute, we can see this market maker buy model up here, and then this sell model, sell side of the curve here. Okay, on the 1 minute, we did have a market structure shift. Okay, and it was very big distribution to the downside. So a market structure shift with a big distribution. Okay, so you can see we had this up move here, left a bullish FEG where price absolutely obliterates through it. Market structure shift on the 1 minute time frame. So as I've tried to explain a few times before, that move happened between, let's see, between 3:30 New York time, and so that's 3 a.m., 3:30 in the morning, New York time, and then the downside of it finished at 3:47. Now, this gap in time here, this 15-minute window that's highlighted here by this purple box, the reason I never trade that is because we don't know where the 1 hour is going to close at that point. Now, I've said this a few times before, and what you could have done, obviously, regarding that, is you would have been able to see that the 1 hour here is the high is very high up. Okay, so you would have had this level drawn out. So let's say it's here. Okay, so we'd have needed price to close below that for it to be valid. Okay, to have the valid 123 or CRT, whatever you want to call it. Now, at this point here, you could have took this trade because realistically, is price going to move up again 20 pips? Probably not. Okay, but the reason I like to just give it that extra little bit of time in them 15 minutes is because that's the back end of a candle. Normally, you're not going to see the most distribution at that point in time. So, reason for the trade where I took it was based on the 1 hour, obviously. So we had this 1 hour close that confirmed the pattern, 123 pattern or CRT, whatever you want to call it. Obviously, then you could target this low here, which would have been the low of that candle that got swept. And then obviously you have this previous day's low as the main draw where price is still aiming to get to, and I don't see any reason for it to not go down there. So on the 1 minute time frame, obviously we've had this market structure shift, inverts the bullish FEG, and then our first FEG that we could take entry from is this one just here. Okay, so what you could have done is taken your entry from the bottom of this FEG. Okay, which would have been after you had the new candle open as well. So 4 a.m. we had new candle open here. Price digs back above it here, doesn't tap into anything. And then you see the move that tags into this 1 minute FEG above the new candle's opening price. It's quite key that you see this happen, because that shows you've got manipulation for that new 1 hour candle. Okay, you need to see the open and then a high. If we're going bearish, you need to see an open, which we had, the high created. This is where you want to be getting in, and then obviously we create the low and then close. So we had this new candle open, price dragged back above that into this 1 minute FVG. Now, if you go on to the 3 minute, you can see that this nice 3 minute FVG is where price roughly was tagged in from, as far as I would have took it, but I would have took it based off of this. So obviously here we have the new candle open again, price goes back above. I would have taken it based off of this here, so probably would have took it off this candle. You could have just taken it off the first tap of the 5 minute FVG, which sort of intertwines with the 1 minute anyways. Okay, so you're still within the 1 minute FVG. Price would have been, you know, like I said, if you'd have took it on the downside of it, you could have took it here. You could have took it here anyways. So yeah, that was the first trade that came in, and that was a 1 to 2R. That was very, very clean. As you can see, this is the hourly chart. Price swept the high, closed back in the range, and absolutely obliterated down. Like I said, see no reason for this previous day low not to be taken now. And that's the first trade that was missed, but was a 2R trade. And based on how we trade, was perfect. A really nice setup. The only thing stopping it being A plus is obviously we didn't have a 5 minute market structure shift, which would have been ideal. But like I said, 5 minute, 1 minute, 3 minute, they're all used for our entry. So you can use them, overlap them, whatever you want to do, depending on how confident you are with the model. And then secondly, we had this setup on GBP CAD. Obviously, both trades were GBP based for shorts. And again, very, very simple. It's very easy and clean to see. This is the 1 hour chart. I'm left it overlapping there as well, so it's even more clean to see it. Okay, if we just take it off for now, so it don't confuse people. You've got this candle manipulates back into this range here. It does close below, okay? So you could have looked for shorts based on this candle here. But as far as I'm aware, we didn't actually get anything on that 2 a.m. candle. Okay, yeah, so no market structure shift down here. Price rallies higher. Again, no market structure shift on the 5 minute chart, okay? So we wouldn't have taken anything based off of this 5 minute chart. Again, this is the first 5 minute candle where you could have took an entry from, but we didn't have a 5 minute market structure shift. 3 minute time frame, you have this shift in structure here, but again, nothing was entered off of that. But where you could have took your entry from was on your 1 minute time frame. Again, these are based at the same times, okay? So you've got your market structure shift level here, where this candle distributes lower, leaves an FVG. Again, like I said, look at the time. You could have took this entry here, okay? Put your stops above London, gone low, 2R, whatever you want to do. But why wouldn't we have taken this? Because look at the time that it tags in, 3:49 a.m. We would have waited till 4 and had the new candle open, okay? You get new candle open just here. Price starts to go lower straight away, which is not what we want to be seeing. We want to see price go back above that high to create the high of that new candle on the 1 hour. You always want to see, if you're going bearish, you want to see a high put in, and you really want to be getting into your trade in that manipulation part of the leg, which you can see, look, open, manipulates around price for a little while, then it manipulates higher. You could have taken your entry now, and where I would have taken my entry is still based on this 1 minute FVG. I would have just pulled it along. Okay, so you would have got in and entered here anyways. So you would have tagged in just about here. Again, like I said, stops above the highs all the time, especially if you create a London high, and then you get the low, okay, where you would have tagged 2R, which is why I trade for a minimum. I pretty much only trade for 2R, so that's sort of the only trade that I would have took. And yeah, and that would have been based on the 1 minute time frame. Very, very clean setup. And yeah, they were good, clean setups. I just wouldn't have taken them based on the mix and match between the 1 and 5 minute. Obviously, if you trade both time frames, you can take either one if you want. But yeah, ideally, these were two good setups that were missed. I mean, you got a little bit of drawdown here, probably 1%, and then price absolutely rallied down. Literally, you can see the sell side of the curve just absolutely playing out perfectly. Price completely obliterates the 2R. Again, I see no reason for these previous days lows to not be taken now at this point. But yeah, very nice trade setup.